Okay, let's talk about StockTrak because StockTrak simulation is ready now, and that posted an announcement with a link. So it's important that you go into your course, go into the link that's in the announcement. It was called StockTrak simulation is not now live. That's the link. That announcement has the link for you to go to StockTrak. It's important to follow that link because then it takes you to the correct class, to your class. So once you click on that link, you will actually get the first time since I've already been in here, it recognized me. But the first time you do that, you're going to be asked to sign up, right? So create class or sign up. Let's see, and I'm already here. It's showing me 3 of my classes and asking me to pick, but you will only have your own particular class to go into. So um, I'm going to go to dashboard, right? You go to dashboard, what you'll see is a particular, you're going into your classroom. But unlike me who's already signed up, first time you do go in there, you will be asked to sign up to create user ID and password, and then you get into the class, and that'll be the user ID password you can use in the future. Um, then the next time around, you actually don't have to follow that link itself, but remember this URL. It's uttyler.stocktrak.com. So after you have signed in um, and created your user ID and password, you can simply go to uttyler.stocktrak.com, or just bookmark this link. Uh, but that'll take you to your class. And of course, this is what my dashboard looks like. Your student dashboard will look somewhat similar. You're going to have an assignment. There's only one assignment, so you won't need to choose between assignments. Just leave the one that comes up. And then on the right hand side, the scroll bar, you scroll down and you can see the various things that you have to do. And there's a couple things I've already done. So one of them was watch video from trading stocks, and it says it's 100% complete, right? And that because I've already done that. And I've done a couple things. At first, this overall completion rate, it starts with the 0, and as you do more and more of the assigned tasks, it progresses. So it's showing that I'm at 11% completion right now, but that's your task. Your task for this simulation is really to just get to 100% completion rate. You get 100% completion, and you get 100 points for StockTrak simulation. So it's that easy. You just need to finish all these assigned tasks, right? So it's watch this video, read this article, etc. There's more videos to watch, and they take you through various kinds of um, orders you can place, the various things that you can trade. Um, there's a article on building a diversified portfolio, but those are tips, etc. Then you get to trades. These are the trades you have to make, and there's a total. If you see a total trades, you have to basically make a certain number of total trades. It may not appear in every simulation, but if it does, then you need to have 50 total trades, right? Then you have to. Then there's a couple of buying and selling of stocks and ETFs, and I think you're required to buy either 2. I think, yeah, it's 2 stocks or ETFs. ETF is exchange traded fund, and it works just like a stock. Then you got to buy or sell a bond. So there are certain tasks that you have to do, and as you do those tasks, your overall completion rate is going to increase, right? So now you got some videos to watch. Where do you find the videos? Well, the videos are in here, in tutorial videos. On the left-hand side, if you look at the links, you have tutorial videos. You go into the tutorial videos and you have basically three tabs. One's titled Managing Your Portfolio, but within that, there is a video of the site, the StockTrak site itself, site navigation. There's video on research tools. There's video on order types, right? And as you watch these videos, you will get points for completing them. Then I went to basic trading, and there's trading stocks, trading mutual funds, trading bonds. Then there's derivatives trading, and the one thing that I do not ask you to do is future options. So you don't need to watch this or do any make any trades for future options. But they're here regardless if you want to watch them and learn about future options. But you do need to do spots and options and futures, and so there are videos for that you must watch. So once you watch a video, you get points for those videos. So when I say I want to watch trading futures, I click on that, and that video comes up. Click on the play.
Is highly leveraged with high risk and high reward. This tutorial walks through how to trade futures on this system and what it means to have them in your portfolio. To trade futures in this system, go to Make a Trade in the main menu and click Trade Futures.
Okay, so I'm going to stop this. So I'm not going to wait for this to complete. I was just trying to show you how you can go to various videos and watch them. Then you can go back to dashboard, and then you have to make certain kinds of trades, right? You have to make certain kinds of, and you can see my dashboard went from 11% to 14% because it thinks I watched the trading futures video, although I stopped it in between. And truthfully, trading futures, yeah, I didn't really go through it, but truthfully, I shouldn't get full points for it. But maybe it's cutting me a break because I'm the teacher. I'm just kidding. The starting was enough, but usually it would want you to finish watching the video, finish the whole video before you get those points. Anyways, so of course those are the videos and the articles, etc., are going to enable you to learn, right? And then you do the trading. So to do the trading, you do make a trade, right? First thing you might want to do is trade some stocks. Well, what stocks to trade? Well, you can, of course, get some tips from watching CNBC or Bloomberg TV. I know what stocks are good to invest in at the moment. Here, StockTrak itself is showing me the few stocks that have been actively trading today, right? And so I may have learned something about one of these. You can find out more about these stocks if you click on any one of them. Let's see, let's do Procter and Gamble, and then I just clicked on it, and it tells me P&G stock, and I can do more research on it. I can find out what's quotes and news, what is the latest news about P&G stock. The stock has a ticker symbol of PG, and if I just want to say buy PG, and its price is about $80, right? So if I buy 100 shares, I'm spending about $8,000 on buying, and if I leave it at market order, then it's gonna get completed right away. So there's a commission of $10 on each trade. I'm gonna buy 100 of these, so 8,071. At that's the market price, right? Plus 10, that'd be 8,081. Actually, the estimated cost 8,089 is going to be based on the ask price. So there's two prices, a bid price and an ask price. So bid is 80.75, ask is 80.76, right? So that's if the trade were to execute it right away, I would get the ask price. So there's a dealer saying he'll buy it, P&G stock at 80.75 and sell the same stock to you at 80.76, and that ask price is the ask. But I've been talking about it for a few seconds already, and the market is live. It's it's about an hour before markets close today. That's why I wanted to make this video right now when the markets were open. So when I confirm it, it's that order, because it was a market order, it will get executed fairly quickly. It says your market buy of 100 shares was sent to the market, right? And then if I look at, it says view, and the status says it got filled. So it's not going to show me the price at which it got filled, because it's a little too soon. So that's where it's shown a little delay. But my market, because it was a market order, got filled right away. Now, if I could try to buy something else, and this time, instead of, let me say I want to buy Apple stock, and the Apple stock, AAPL is the ticker symbol for Apple, right? And Apple's, once again, 100 shares of Apple stock, but I don't want to leave any uncertainty about how much I will pay for it. Then I will place a limit order, and the limit order, I can put a limit. So I can see that the bid and ask is about 174.53 is the current ask, and by the time my order hits the market, the things could have changed, and the prices skyrocket, then I could end up paying 200 for it, and I don't want to do that, right? So I'm going to say I want to buy this at 174.5. Okay, and it won't get executed right now because it's a couple cents lower than the most recent bid and ask we're looking at, right? So I'm going to say I know it's not going to happen now, so if I leave it at good for a day, then if it doesn't get filled by the end of today, it will not get filled. So I could say make it good till cancel, and I will tell you later on if I want to cancel this order. Until then, you leave this order open. If it doesn't get filled today, try to fill it tomorrow. If it doesn't get filled tomorrow, basically we're waiting for the price to come down a couple of cents, right, from 174.53 to below 174.5 before this order gets filled. And then, or I could say good till a certain date. So I could say make it good till February. Today is the 23rd, so then it's Friday. The markets will be closed on Saturday and Sunday, so I'm going to make it, give it till February on Monday. Whoops. Oh, I guess I should just pick from here. So February, Monday is going to be the 26th. So now I'm going to place an order, and the broker has till the end of February 26th to fill this order. And if it doesn't get filled, if the price doesn't drop below 174.50, on Monday or even later today, the order will not get filled and it'll get canceled. Right, so I'm going to preview this and then confirm. So confirm that order. So the orders went to the market, right? So now I've bought a couple things. So let me go to my portfolio and look at open positions, right? And actually, the Apple one, the Apple order was a limit order that hasn't been filled yet, but I do have 100 shares of P&G, right? I still don't know what the price paid was. They'll probably tell me tomorrow. But the last price was 80.74, so somewhere around that's what I probably have paid. It was a market order, so we'll find out soon enough. Well, actually, it's already showing me that there's a loss of $13.50 on this trade so far. Of course, that includes the $10 that I paid for buying this stuff, which was the brokerage cost. Anyway, so you have this initially, well, that's going pretty fast, the overall completion rate, right? What happened? Well, let's look at my assignment. I guess I have to go back to dashboard to actually see what all I have completed. And the assignment is watching a couple of videos, then buy or sell stocks or ETFs. We had to buy 2 stocks, and I bought 2 already. Total trades, so 2 is 4% of 50 total trades that are required. So it says you're 4% over there. I've used a limit order. That's a type of order. So under order types, I've used a limit order, and I've also used a good till date limit order, and I've used a market order. So that limit order we placed has checks in use a use buy order, and it checks in place a good till date order, right? So you can use a limit buy order, but you can also use a limit sell order, in which case if I have the P&G stock and I want to sell it, I can say what is the lowest price I'm willing to accept and make that a limit order. And if it doesn't get filled today, I can leave it open. You remember, good till canceled until it gets filled, or until I say cancel that order. Or I can do, limit order good till day or good till a certain date. Just like we had a limit buy order, we could do a limit sell order for something. Then we can go back to my portfolio and then look at making a trade, and you can see there's trading options, trading mutual funds, trading futures, bond spots. All of these symbol lookup is not a trade. It's just to find the symbol, like PG was the symbol, ticker symbol for Procter and Gamble. But you have to make pretty much all of these except for future options. That's one thing I haven't put in your assignment, is to trade future options. But you do have to trade stocks, you have to trade mutual funds, so go into mutual funds. And a mutual fund, of course, has it will have, let me go here, a mutual fund will have a 5-letter symbol, and if I want to go to I'm going to go to fidelity.com, because Fidelity is a company that has a lot of mutual funds. And so if you look at their investment products, the first thing you see is mutual funds. And we can find mutual funds, various kinds of mutual funds, right? So let's just go and explore fund offerings, Fidelity. And there's different types of mutual funds, but here's these are styles of funds: large value, large blend, large growth, small values, or small and mid cap. But these are large companies. These are slightly smaller or medium-sized companies. Value stocks are stocks that are priced below what they're worth. So you're finding bargain stocks, growth stocks may not be priced below what they're worth, but they have a lot of potential for growth in the future. The company is expected to grow, so the stock's value will rise with the growth in the company. And a blend, of course, is combining the two. There's some value stocks, there's some growth stocks. Then you can get those in different sizes: large, small, and medium cap. There are others that the income-oriented is for people who want to invest for income rather than growth in value. I mean, rather than capital gains. If you want to invest in stocks that pay high dividends and you get current income, so that would be for people who have retired already and they want to live off of their savings, right? Then they will be attracted to income-oriented funds. But there are others too. There's other types of mutual funds: international equities, sectors. Sectors are different kinds of industries. And so in sectors, you can see there's going to be consumer discretionary, healthcare, materials, you got industrials, energy, financials, telecommunications, right? So these are different industries. And there are several others. An index funds will be tied to an index like the S&P 500. So here's our funds that are that track the S&P 500 index, and the index itself is just an average of 500 different stock prices. So you can't really invest in the index, but a mutual fund that tracks the index is actually a fund in which they purchased shares in all those 500 stocks, and so that becomes an investable asset, and you can buy those, right? So that's what a mutual fund does. It actually gives us instant access to a lot of different shares of stock. It gives us instant access to diversification, right? So you don't want to put all your money in one or two stocks, but because a company can fail. But if you have your money invested in across a large number of stocks, so if your money is split up amongst 100 different shares, stocks, 100 different stocks, then if one of those companies fail, you won't lose all of your investment. And you may actually have others in your portfolio that do better than expected, so they make up for that one. So that's why you don't want to put all your eggs in one basket. You want to split your money across several different stocks, and the mutual fund allows you to do that by providing you a ready-made fund which is invested into hundreds of different stocks. Here's one that has 500 different shares of stock, right? It would be impossible for us to do with our small amount of savings because just the brokerage alone, $7 or $10 for each stock that you purchase. If you purchase 100 different share stocks, that's $700-800 in brokerage, and obviously you can't. You may not, if you had $1,000 to invest, that leaves you with what, 200 to actually buy stocks with. So the answer to that is mutual funds. The mutual funds will take my 1,000 and your 1,000, everybody's small savings, and create a big full pool of funds out of that, and then use that pool to buy shares in 100 different companies. Anyways, so let's just pick one. Okay, so for a mutual fund, you will see that um, the fund has 5-letter ticker symbol, and it usually ends with an X. So the Fidelity 500 Index Fund, Investor Class, and the Premium Class is actually for high net worth individuals and institutions. So you have to have a lot of money for any, even to start this. But the Investor Class, if I look in there, right, it'll give me a few things. But one thing it does tell me is that I need to at least invest $2,500. That's the minimum investment. So after the minimum investment, you can, if you were to actually buy into that fund uh, in your real portfolio, then you would need $2,500 to start. But after that, you could just set up like $100 a month, or or $50 a week. It depends on how you get paid, right? But you could add to it in smaller amounts. But to start, you must have to invest $2,500, right? And how many shares will you get? Well, we don't quite know that. It's because it is 500 different stocks. Its value will not be calculated until the end of the day. So as of yesterday, it was worth 94.75 per share. And let's say 100, let's round it to 100. So with $2,500 investment, you would get about 25 shares. But it'll actually be 25 point something, right? Because it's not 90, not 100, but rather about 95. As of yesterday. As of today's closing, we don't know what the price will be. So I don't actually know how many shares I will get. But when you're trading mutual funds, first you need the ticker symbol, which was FUSEX. So FUSEX. Then you have to put in an amount, right? Wait, it's not actually finding it. Oh, sorry. This is where the symbol goes. I have to put in a dollar amount, which would be, let's say, I'm going to put $10,000 into it. Okay, 10,000 is the dollar amount. The fund itself is FUSEX, right? So I had to recognize that, and so I'm going to say this is what I want. That was the last price, which was up by 11 cents from the day before. But I don't really know what price I'm going to get. I can only say put $10,000 into this fund, and as then tomorrow, whatever the price prevails, that's what I will get. And so I know that the total amount that I invest is $10,000 plus $10, which is the what's that? Is that valid quantity greater than 0? Is it the comma that's messing you up? Okay, the comma was messing it up. Anyways, so I said $10,000, and that $10,000 with $10 in commission is going to cost me $10,010, right? So now I hit confirm, and that gets me that sent the order. Then my order is not going to be completed till tomorrow because we don't know what the end of the day price is. And sometimes there's a cutoff time, and this is the last hour of trading, and this may be too close, and I may not even get tomorrow. Of course, this is Friday, so tomorrow is when the markets are open, which is going to be Monday. So I may not even get the price at that opening price on Monday, but rather the closing price on Monday, because I placed this order so late in the day today. Anyways, so that was mutual fund, right? And go back up, you can go to trade, you can go and say, let me trade options. So when I get to options, now if you remember from chapter 1, we had discussed options, and an option, you can buy a put option, you can buy a call option, right? So if you do a stock symbol, there are options available for various stocks. So if I'm going to do MSFT for Microsoft, right? And then so it tells me the price of the stock itself. And I say I want a call option, right? That expires. Well, here are the monthly expiration dates. Obviously, I don't want today as an expiration date. For February options, I don't want those. Then there's, well, actually, Microsoft is very popular, so there's the weekly expiration days, right? So I'm going to go with, say, end of March. That's the expiry date. I want to, well, now options come, an option is to buy or sell one share of Microsoft, right? But they come in contract sizes of 100. So when I say 1, that is a 100. Okay? So that's, if I say 10, then that makes it 10 100 stock options, right? So that'll be for 1,000 shares. I am buying to open a position, so it's buy to open, right? Now I could have sold this option, then I would be saying sell to open. You're selling to open the position. But if you're buying an option, this is to buy Microsoft shares, right? Now I've got to select a strike price. Well, right now the price is about 93.6, right? So I want to go and maybe say I'm going to buy it for 92, let's say 95. So I have an option. I got till 329. I'm buying, I can buy at 95. Or I'm going to go a little bit lower, say 93.5, which is close to today's price, right? Now I have until March to buy, until March 29th, to buy the stock at 93.5. Right? And obviously, here's the hockey stick symbol, which shows me that if I don't do anything about it, I'm going to lose some money, right? And that loss is this price I'm paying for this option contract. So that's the bid and ask. The ask is 231. So 231 is what I'll get. Now 231 for each share, right? With 10 contracts, this is for 1,000 shares. So it's going to be $2,310 that I am going to invest. And that is to be able to buy 1,000 shares of Microsoft at $93.50 between now and March 29th. Right? So I just previewed this and I'm going to confirm. It says may estimated cost around $2,400. So let me confirm that. And now I've got options, and so until March 29, I can buy these shares for $93.50. Now if I decide not to do that, then I'll lose the $2,400 that I just invested in this, right? So if we go back and look at open positions, let's see. Well, that's still not showing up yet. that option. One thing that we have now found out is for the Procter and Gamble stock, I paid 80.87. They weren't showing that until now. The option contract, well, hasn't gone through yet. Don't have it yet. Let's see. Oh, well, maybe I'm not looking. So under open position, this is stocks under equities. So I have to look at options. Okay, it's not showing anything yet. Mutual funds, well, mutual funds I would not get until tomorrow. So, and the option when that trade gets filled, it should show up here. I'm only seeing the stocks and completed transactions yet, right? But if I go back to the dashboard and then look under all the things I've done, I'm at 29% completion rate right now, and going. So I got bought stocks and ETFs. I've got mutual funds. It says buy or sell mutual funds. I'm 50% complete because the requirement is to get 2 of them. Did the limit buy order, a good till date order. We've used a market order a couple times with that option and with the P&G stock. Watched video on trading options. I'd done that before, but I just purchased a call option, right? And that was this one, well, purchasing a call option was one of the requirements, and I'm 100% complete there. But you just keep an eye on your overall completion rate in your assignment, and you need to get it up to 100%, and you get 100 points. If you get it up to 90 and leave it there, you get 90 points. That's how this works. So it's just based on your completion of these assigned tasks, right? Okay, and what else? Let's look at some futures. So if you want to trade futures, there's going to be lots of futures to buy, right? And what is a future contract? Well, it is a contract that will get executed in the future, but you do not have the option to not do it. So you're really locking yourself in with the futures, right? So if you want to get futures, there are different types of futures. So there's futures on stock indexes, right? So these are indices. You can get futures on currencies, right? And you can see there's different currencies that you can get futures on. And if you think that the euro is going to go up, well, relative to the dollar, then you can buy a contract. Now, with futures, never buy more than one contract because they are huge. So this is a contract for 125,000 euros, right? And the bid and the ask is 1.232. So 1.232 is in dollars. So my contract size, this could be $150,000 contract, right? That's just one contract. Or you could go to, of course, stock indexes, and with indices we have Dow Jones, NASDAQ 100, S&P 500. These things that are called mini Dow, mini NASDAQ are smaller contracts compared to the big ones that are very big in size. So the actual S&P 500 contract has a multiplier of 250, right? And this one has a multiplier of 50. So you'll take the level of S&P 500, which is somewhere around 2,700 right now. By the way, up here, these are not the actual numbers. These are this S&P 500, 273.81. Actually, this is off by a factor of 10. S&P right now is at 2,700. if I go to, you can go to a place like finance.yahoo.com and find out the index value. The Dow Jones is 25,222, S&P 500 is 2,740, and then in the StockTrak dashboard, all of these are sized down, right? This is sized down by a factor of 10. This is sized down by a factor of 100. Anyways, so our futures for S&P 500 has a contract size of 50, so it's that 2,700 times 50. That's so 2,739 times 50, right? So that's how huge this is. And if you think that the S&P 500 is going to go up in value, well, then you can just buy futures and you get tremendous amount of leverage. So let's just buy one contract that is expiring in June 2018. Okay, we don't have to hold on to it till June. We can sell it before that. If S&P goes up some more, then we can make a nice little profit over here. Of course, if it falls, we can lose a lot of money. Now, it says the estimated cost is $4,490. This is just the amount that is going to be subtracted from my account. By the way, I started the StockTrak account with $1 million in cash, as will you. So you'll have $1 million. But this 4,490 is simply a margin. This is amount that that's going to be subtracted from my account and kept aside. And every day, as this futures contract, as its price goes up and down, this margin account will be adjusted by that amount, right? So basically, if I lose $200 because S&P 500 fell a little bit, and hence its futures price fell a little bit tomorrow, then 200 will be subtracted from this amount. And when it gets low enough, I have to put more money in there, or sell my contract and eat the loss. Anyways, so now let's confirm this order, and I got some futures, right? So let me see if I can showing in my portfolio yet. Under open positions, we got under equities, we have PNG. Under options, it's not showing yet. Futures, there's the futures. It makes me wonder if I never confirmed that options, the options contract order that I was placing. Anyways, because it was not it was a market order, right? So it should have been executed right away. Well, let's so that's another thing that you have to make sure of, that you have actually confirmed those orders so they are in your portfolio. And then tomorrow, I'll look at tomorrow, and hopefully tomorrow, meaning Monday, because today is a Friday, so the next day markets are open is Monday. If it's my option is not in there even on Monday, then I'll replace that order, do it again. So that's how we trade. Let me take you to bonds, and let's look at the various choices that we get in bonds, right? So when you go to bonds, there are all these bonds that are from different companies, and each one, if you look at this one, if I pick this, it says Allstate Corporation. 5.75% is the coupon on that bond, and it expires in August 2053. Right, so there's a long ways to go with this bond. Its market price is $1,065. Remember that bond's price, if the coupon happens to be higher than the current interest rate, it's the yield to maturity on that bond, its price is going to be higher than the par value. So market price $1,065 says that this 5.75% is probably a pretty good interest rate on this kind of bond from Allstate Corporation. probably has a very good rating, right? A AAA rating or so. So you can just buy 10 of these bonds. And once again, I can do a market order. In this case, there's only one choice, so it's just market order. So let me just buy 10 of these bonds and confirm that. Now, and that was the corporate bond, right? So you go back to trading bonds, and you can actually see, if you scroll down, these are all these various corporate bonds, and then we start to see these treasury bonds. So T-notes are bonds that are going to expire in the near future, right? These are all going to expire by the end of this year. There's some other T-notes that are going to expire in the next 1 or 2 years, maximum 5 years. Anything the Treasury issues which has more than 5 years maturity is called a T-bond. So a Treasury bond, right? This one will expire in 2 years, but it was when it was first issued, it had a whole lot more than 2 years in maturity, right? More than 5, maybe 10, maybe 15 years. All the way, you can go down, and you can see that that these Treasury notes, right, if they are about to mature, have a relatively high interest rate. But the ones that have long ways to go, because interest rates have fallen in recent years, they've been very low in the last decade or so. So Treasury bonds that have that were issued in the last decade or so will carry lower um, coupon rate, right? So this one has a lower coupon rate of 3.125%. If you pick that, you can see that that's not enough for whatever it is, 2042 today, and right now it's 2018, all right? So February 2018 to February 2042. How many years is that? About 24 years. So it's not enough for a 24-year Treasury bond with that 3.125% happens to be a little too low, and that's why it's only selling for 993.2. So I can go ahead and buy a few of those, and so regardless of its price, what it will give me 3.125% coupon every 6 months, right? So I'm gonna preview that and confirm it. And so now I have some Treasury bonds in my portfolio. And I'm up to 34% completion. Let me go and on my portfolio look at open positions, equities, options. Okay, it's pretty clear that I did not confirm that option trade I made. Mutual funds won't happen till Monday. With bonds, here are the bonds we just purchased. So, Allstate and the Treasury bonds, and those are. That's interesting. It's already showing me a profit of 82.50. Anyways, so this is basically how you can go about making trades in your StockTrak assignment after you have followed the link I've given you and created your account and gotten into the right class. You can simply go to uttyler.stocktrak.com and log in using your login credentials. And so basically, keep an eye on your dashboard. So you have click on your dashboard and keep an eye on your completion rate here. And as you scroll down, you will get to see each item and how far along you've gotten in each item. So I bought a buy or sell a corporate bond. I bought a bond. It's 50% complete. I can buy another corporate bond to be 100% complete, or sell this corporate bond and get 100% completion, right? So just scroll down here and you will get to see what you have done and what you need to do. And then your charge is to complete this bar, get this bar to 100% completion rate by April 27th, right? That's when the simulation expires. April 27th is the deadline. Right, I think I've given you enough to get a good start. And of course, if you have any other questions, you can shoot me an email.